Hello, everyone. Thanks for taking time to watch this video. My guest today is Brianna Clayton with Quest Trust. Quest Trust is a company that works with people with IRAs, and they educate them on how to set up an IRA and how to invest in different types of, asset classes, mainly real estate. That's the space I'm in. Um, Quest IRA is based out of Houston, and I think I will let Brianna kind of take it over from here. I met her at met her at the National Lending Expo in San Diego, California. And we got to chatting a little bit about their programs and their services. And I was very, very impressed with what they had. With that being said, Brianna, I'll let you kind of take it from here and add more.
All right. Well, thank you, Andrew. I want to first thank you for having me on. We did meet at the National Lending Experts Conference in San Diego. That's something that Quest as an institution does a lot, which is travel to talk and educate about self-direction and how you can get involved. So Quest Trust Company as an institution, we are a self-directed IRA custodian. So we typically administer IRA accounts for the purposes of alternative investing, which is primarily real estate, but can take on a number of different forms. And so what we do here at Quest is typically centered around education in the space. So how can you get involved in it, what the mechanics look like, and even down to what the tax code says that you can and you can't do with these types of accounts that we administer here today.
Mm-hmm. Very good. Very good. So if you're like me, nobody that I know of is an IRA expert on these things. And we know the only thing I know about IRAs is that Uncle Biden is trying to get into that, take some of that from us. So Brianna can help us and educate us on what to do and how to counter that. But before that, I have a few questions that I'm going to ask her. And my first question is, tell us about the different types of clients you serve. What or who is your ideal client?
Okay. Well, overwhelmingly, we notice that the clients that end up opening the account, making the investments, are real estate investors already, right? So a lot of the times it's not their first investment that they're making into the alternative market when they put it into an IRA, which arguably could be for the better just because you understand the mechanics of that. This is your retirement money, so it's really important that you do understand the ins and outs of this transaction, both outside of the account and inside. So these are individuals who have that experience and they're looking for a better way to build their wealth in the long term. So most commonly we're contacted by potential clients in one of three cases. I'll say the first one, and I think this one's the most common, especially in the past couple of years, is that we have clients calling wanting to diversify beyond the stock market or even nix it altogether. But a lot of the times we're seeing clients who are still wanting to hold some public investments, but they have some interest in the private market as well. And so they're trying not to keep all of their eggs in one basket, specifically when it comes to their retirement funds. That way they can truly diversify into everything that is available to them at that time. Another opportunity we see clients taking is whenever they're conducting these investments outside of the IRA and all of their income is starting to come in, whether that be rental or payoff income, whatever the case may be, and they're being taxed on it right on the front end. So something that a lot of people moving to the self-directed side of things are looking for are those tax advantages that almost any IRA you invest out of come with, whether that's going to be tax deferred income or even tax free, depending on what account you're looking to invest out of. And then the last one, which I think is fairly common as well, and I think is just a general idea for most people, is that they want more control over their retirement funds. A lot of people have been invested in the stock market through their employer's 401k, whether it be current or previous employer, for 5, 10, 20 years now. And so they're looking to have a little bit more control over those accounts, put it into an asset class that they actually trust, and make sure that over time, as it grows, they're really taking full advantage of what's out there.
Mm-hmm. Okay, very good. Very good. Thank you for that.
Of course.
What are some of the advantages of investing with Quest Trust than, say, a competitor of yours? Why Quest Trust?
I do really love this question because the truth is there are many companies out there that do what Quest does. However, Quest chooses to highlight a few different things. First and foremost is our focus on education. We are a very education-centric company, not only just to our clients, but anyone looking for alternative investment education and our employees as well. So there's a very heavy focus on the education that we're putting out. We do this very frequently. We get feedback on the education that we're putting out. We have different speakers on an array of different asset classes who talk about what the ins and outs look like, what the current market is like for that asset class, case studies, which I think is one of the most important things when it comes to education, and really real life applications to what it is that they're offering. So we have this very education-centric approach because we want to arm both clients and non-clients alike with the education they would need to further diversify and move into these other options that may be considered a little bit of a niche market when it comes to investing their retirement funds. The whole idea behind these retirement accounts are that you're building this wealth for the future. So that way you can finally put, that 9 to 5 behind you and you can utilize the income that you've been accumulating for all of these years, tax deferred even, to start making some of those dreams come true in the long run. So that's one of the main things. Sorry about that. That might happen a couple times. But that's one of the main things that I think sets us apart from our competitors. Outside of that, with that education as our foundation, we also strive to meet the standard of world famous customer service with our clients. So we don't have any automated lines. We have some of the fastest processing times in the business. And if you ever give us a call, whoever's answering the phone, which is, by the way, everyone throughout the whole company who answers those lines, we'll always ask you, how can I make your day? And it's truly meant whenever we speak to our clients, because we really want to have that standard where you are not just calling in, to get a bill paid or what have you, but that you have someone here with some specialized experience and attention to you as a client. And that's really where our focus lies and truly what I think sets us apart from the rest.
Mm-hmm. Okay, very good. I love the educational component of any type of service, even especially with the IRA. We know that, the IRS wants to get their money, and we know about, tax, deferring taxes versus not having to pay tax on certain type of investments and instruments like an IRA.
Right.
Regarding the education, is that by chance free? Do you provide that for free? And how is that presented? I take it you probably have videos and maybe downloadable guides or something like that, or can you tell me a little bit more about the educational aspect and component of Quest IRA or Quest Trust?
Primarily, we are hosting webinars about twice a week, and they're all archived through our YouTube page for everyone's favorite price of free. You just have to register online. We'll send you a quick link to join, and then you will be able to watch it there. And then, of course, if you missed the presentation for any reason, you can just visit our YouTube page. We also post it on LinkedIn and Facebook. So you have a few different avenues depending on what you prefer. But it's all the same content. We have it out to everyone. So it's not exclusive to just our clients who pay us fees. It's for anyone who's looking for the education. So we have a lot of regulars who come to our events, both in our physical locations in Houston, Austin, and Dallas, as well as our online presentations to really get to know the speakers and expand their network as well. Because I do think that's one of the main benefits of hosting these live classes is that you can actually communicate with the speaker in real time, get some of the insight that they're providing, and then ask any questions, that may come up as well. So we primarily go through the online route for if you're not located in Texas, but if you are, Houston, Austin, and Dallas are where our physical locations are, and we do host monthly networking events in our offices, but we also have a virtual networking event as well, which focuses on deal pitching and things of that nature.
Oh, nice.
Yeah.
Okay, very good. Okay. Tell us a little bit about some of your best clients.
Yeah, so some of our best clients are, and we always say this, is that our best clients are our most educated clients. They're the ones who are fully vetting out these deals. They approach us wanting to understand the rules and the restrictions of IRA investing. They bring up every question under the sun. They're seeking the tax and the legal advice that they need to feel comfortable moving forward. And they're getting to know the individuals on a personal level as to who it is that they're working with. That's a very, very important part of the process process that I think sometimes may get overlooked in that initial consultation. But the clients that we see succeeding are going through all of these additional steps to not only feel comfortable moving forward, but to actually successfully move forward and receive the income that they're hoping to with these investments because they fully vetted out a deal to the greatest extent that they could. So educating yourself is the best thing that you can do to put yourself in a better position in the long run. It's really important to fully understand both the risks and the rewards of private investing. And again, it's one of the best things we've seen our clients do for themselves.
Good. Very good. Yeah, I totally agree. I'm one of those people that do the same thing. I'm reading books and watching videos and doing everything I can to educate myself on all topics, especially related to real estate investing.
Yeah, absolutely.
And financing. Okay. So let's kind of put the gear in reverse a little bit, so to speak. Tell us about some clients or some situations that were not so good. Maybe you could give us a war story or a horror story or something.
Yeah.
And how did you get through that? What became of that? What lessons did you learn? And what can you share with us on what not to do or how to learn from this?
This is a great question, and I do want to steer away from talking about any specifics for security purposes, but
Sure.
I do really want to reiterate that the due diligence is key here. There are instances in which investments go bad. For example, a borrower stops paying back on a note, an apartment complex that ceases to generate income. I mean, whatever that may look like for whatever structure you're going for, these things do happen. And so what's really important to do in the very beginning is to identify that exit strategy and to do this on the front end of the investment and not when something goes wrong, right? So you don't want to be putting out fires as they come up. You want to plan for a worst case scenario. Obviously, that is in no one's hopes that that actually happens, but plan for it. Have these steps in place that should this go down the darker route, I do have means and recourse to get my money back, to continue working with this individual, and ultimately not lose whatever I had invested in this deal. Because it's not just like the stock market, right? Some of these investments are structured very, very differently all the way across the board. So it's really important that you have the proper legal team, even just an attorney who specializes maybe in multifamily or what have you, look over that contract, let you know exactly what those steps are going to look like for you, and familiarize yourselves again with the individuals that you're working with. If you have multiple points of contact, we find that that is the best case scenario where you can point your questions towards multiple individuals and make sure that you always have and are maintaining that point of contact throughout the lifetime of the investment as well.
Right, right. Okay, so if I'm tracking you correctly, you're basically saying in a nutshell that prevention is better than the cure, right?
Exactly.
And
Yeah.
so it all focuses and starts with a good solid agreement or documentation. I'm not sure what your verbiage or what your description of these forms are, but you obviously want to do your due diligence on the investment that you're going to put money in, and that all starts with the attorney. So you have an attorney that can help your clients structure these investment
So as
acquisitions, or can you maybe just elaborate on that just a little bit more?
Yeah, I certainly can. Well, one thing I want to mention is that Quest as a custodian is not permitted to provide tax, legal, investment, or structuring advice, right? We come from a very education-centric approach. What that means, however, is that our clients do typically seek outside counsel in order to look over this documentation, to structure a deal, to draw up paperwork, whatever the situation may be. Now, in our network, through our educational platform, we do have a lot of individuals who do specialize in things such as creating a trust or looking over multifamily documentations, due diligence when it comes to note investing and things of that nature. So we're more than happy to share these resources with you. A lot of the times through that educational platform, they do share their contact information. So you have a way to get in contact with them. But because of our role, we can't directly recommend or endorse anyone. So we can provide you the resources and just ask that you do your due diligence, of course, before conducting into any transaction with them. But overall, there are certainly some individuals through that YouTube page, Facebook, LinkedIn, whatever you're looking for, that you could potentially connect with to get the resources that you need.
Mhm. Okay, good. Very good. Sounds good. Excellent. Okay. how can I best help promote you and Quest Trust? So for those of you listening, and just to refresh Brianna a little bit here, I am basically a commercial and investment property loan originator, processor. I also underwrite for Rock 360, a direct lender, do what we call table funding. So I can basically put the whole package together, send it to them, and then they'll just fund it right away. I work with quite a number of private lenders as well, individuals, not just companies. I'm pretty much connected nationwide. So basically any state you name, you can do it. I'm also educating myself and bringing myself up to speed on notes. I know that with our current economy, the way it is, with the high interest rates and property values going down in some areas, and asset classes in some areas, the asset classes and properties are going up in value. Mm-hmm. And then we have inflation. We make it so it's to the point now where banks are kind of clamping down and stopping all the lending. And so a lot of seller financing and notes, I think, are going to become available here as people, property owners, start to feel the squeeze on their their assets and their income and whatnot. So I'm just kind of wondering if there's anything I can do to help you folks out, Brianna.
Well, on our side, one thing that we really focus on and have been for the past few years is that brand awareness. We want to be seen, of course, as a premier self-directed IRA provider, but we also want to be the choice custodian for educational resources. So when you do have those individuals who are seeking the information and the education, whatever the case may be, being able to funnel them our way and allow them to take advantage of some of the resources we put out, I truly think this is the best way to get and promote Quest as an institution, because that's really what we're going for, right? We're not here just as an IRA custodian. We do have a very heavy focus on that education that we want to continue expanding as well. So I think it's important to utilize the resources that are out there for free. You really can't get a better deal on some of the education we put out there. These are industry experts coming on the platform and talking through some of the logistics about questions that you may have to pay someone for a consultation for. So just some really great information out there that I highly encourage you all to take advantage of.
Okay. Yeah, sounds good. So just to kind of mirror what you said, if I'm tracking you right, just bring the people to you and encourage them to take up your offer on educational services and get educated.
Absolutely.
Okay. Yeah. Very good. I can do that. All right. Let's move on then. What kind of assets are your clients typically looking for? I know it's kind of diverse, but what would you say are the top three that they're looking for?
This is a very, very frequent question we get a lot of the times from general partners or asset sponsors and what have you. But ideally, our clients, like you said, they're all over the board. But we have three main categories that we see most investments fall into. The first one is real estate. And when we say real estate, at least internally, we're talking of an IRA taking title to a property, right? So this is the direct purchase of real estate, whether it's going to be a full cash buy with the IRA or if you're taking on a loan. This is what we categorize as real estate. This also includes tax liens and auctions, things like that. It can take on a number of different forms. The second category we see is promissory notes. So these are typically some form of mortgage notes, but like you said, seller financing, but it can also take on an unsecured note asset, but those are not as common at all. And then the final one, which is really growing in popularity due to the fluctuation of the market in the past couple years, is any form of syndication or multifamily investing is very, very passive. And so IRA investors who are required already to be at an arm's length away from their investments are moving a little bit more towards these passive style investments that have this 3 to 5 year lockdown period on them, to where they can kind of park their money, but still expect it to grow and accrue interest, and hopefully more than expected in the final payoff. But that's really where we're seeing a lot of focus on as of recently, is some form of syndicated style deal, because it's so extremely passive, and that's really kind of a good fit for an IRA investor.
Mm-hmm. Okay. Very good. Awesome. Uh, what are some of the typical dollar sizes or sizes of the deals? And again, I understand that's kind of like a very open, wide range
Yeah.
question, but is there, can you tell me like maybe what the average is, or just kind of like a range?
So it being a range is very, very accurate. We have clients moving over anywhere from 200, 300, $500,000 at a time to 15 to 20,000, because it truly depends on what you're looking to get invested into.
Mhm.
Promissory notes, I can say, typically are the lower dollar clients because you can partner on these types of investments. You're not required to make the full purchase price or the full lending amount just from one account. But multifamily deals, I'd say typically anywhere from 100,000 to 300, just depending on the opportunity, the types of terms they're looking for, just unfortunately all over the board. It really, really is a specialized thing per individual and who they're looking to
Mhm.
get invest with and how long they can keep the money out before they do want to start taking distributions from it and things of that nature. So unfortunately, not a lot of
Right.
specific figures to that end. But
Mhm.
the important part I think I want to highlight here is that you can get started in alternative investing with really any dollar amount. It doesn't matter what it is, as long as the opportunity fits that, which is what I mean when I say you can partner, pull multiple funds together or IRAs more so, and make that investment that you want to make that you may not have all the capital for in one account. So it's all over the board. But again, just want to highlight the fact that really anyone can do this with any type of dollar amount in an IRA.
Mhm. Okay, very good. Very good. Okay. Do you have an idea like what their minimum return, what kind of minimum returns they're looking for?
I do not. I know that in most cases they're still looking for some form of passive income, especially the older crowd that you deal with, above the age of like 40 is hoping that they can start to receive the income in their account. That way they can ensure that they are still making something off the deal. So sometimes these passive deals put people off for that reason. So it's more so just wanting to see continued increase in value. And
Mhm.
so there's not necessarily a set dollar figure or percentage I could put on it, but just wanting to see that income start to pull in. I say around age 40 because at 59 and a half, you can start pulling it out without penalty. So this is about the time that they're checking in as like a checkpoint to say, how much more do I want in this account? So I will be comfortable moving forward by whatever time or date they set their retirement age for. So it gives them a
Mhm.
solid 20 years to plan that out, make sure that everything is going the way it should, and that if not, they're figuring out a different strategy for who they want to invest with in the future.
Mhm. Okay. Okay. Um, are there any specific areas or locations that your clients are looking to invest in? And again, I know this question is vague and it can be anywhere, but I'm just I'm trying to pick your brains just to see if there
Yeah.
might be certain areas that we could maybe focus in or key in on.
Well, I will say for those of you who are frequently attending real estate conferences, if you're sitting in one of those presentations, there's always someone who breaks down what the rental market looks like, where rent's going up and where it's going down in certain locations and things like that. So there's specific hot markets, and we can see that trend continue with IRA investing as well, is that individuals are choosing these key markets where rent has just been increasing and increasing over time. And they're listening to these experts in the industry talk about where they think it's going to go, these projected rental rates. And that's typically where we see a lot of the interest lie. But something kind of special with self-directed IRAs that I think translates kind of to this question is that you can really choose any location that's not your primary residence. So we see individuals doing something that we call social investing, where they'll pick a property, let's say in a neighborhood that they grew up in or that they see themselves living in or that their children might live in or whatever the case may be. They pick that, they rehab it, they put money back into the local economy, hiring local contractors and things of that nature. But they really just have this kind of special personalized touch to the property that they're choosing. So this is something kind of unique to self-directed IRAs that we see our clients doing. And with that in mind, should you choose a property that while the IRA is involved, you cannot live or vacation in, but that you see yourself retiring in, well, at some point in time, you can potentially distribute that property, essentially re-register it into your own name, potentially a taxable event. We can always talk logistics in a consultation, but the idea there is that you're assigning that property over to yourself in retirement. And then from there, you can live in that property. It is fully yours now after the fact, right? So that's another way that we see our clients focusing on what exactly they want to invest into, where they may want to invest into, is by thinking about their long-term goals and where they may see themselves, their children, their family in the future.
Okay. Okay. Very good. Okay. Um, okay. So is there anything that your investors, your IRA clients are not interested in? Any types of assets or?
I don't know necessarily that anyone's called up and said, that they weren't invested in one or weren't interested in one over the other. It is really just a more personalized thing. Like, for example, we started offering cryptocurrency in the last couple years. Well, that's not everyone's cup of tea, and they'll let you know that fairly straightforward, which is perfectly fine. We are all
Right.
over the board when it comes to alternative investing. The only thing that Quest does not handle is public investments. So we have no capability to hold stocks, bonds, or mutual funds. All of that is going to be done through a brokerage IRA custodian. Our specialization is private assets, and so we're built out completely for that purpose. So the only thing that we see that our clients, are moving over because they're sick of would be the stock market. But other than that, we really don't necessarily have an asset class that I would say anyone picks on, over the other.
Mhm. Okay. Very good. All right. Well, that's pretty much all the questions I have for now. I was going to, let's see here. At this point, I'm going to let Brianna share her screen. Okay, yeah. And as we wrap up, Brianna, is there anything else you want to add to our discussion? Anything we did not cover that you want to say before we end this?
Yeah, I think we covered a lot. And it's been great talking to you, by the way. It's really one of the things that our IRA specialist team focuses on. We talk a lot to local investment groups and investment groups all over the country because truly we want to provide a deep understanding of what it is that's expected of you when you're investing out of an IRA. So much so, like I said, we go into the tax code and things like that and can pinpoint to you the exact publications that are relevant to the topic at hand. So I think it's really important that if you are looking towards this strategy, or if you have friends or investors who are also looking towards this strategy, is that there's a lot of information out there. Just be sure that your sources are quality. Call us up if you can. We can have a personalized consultation with you right on the spot. All of these are free consultations. We just want to talk you through what it would look like for you should you decide to move forward. Again, this can be for you or for your investors, whatever the case may be. And we really do offer that personalized connection. You'll be assigned a specific IRA specialist that you'll be working with, and you can funnel all of your referrals through as well. That way we can make sure that everyone's always on the same page, and we can stick to getting that investment made for you based off whatever timeline you may have developed there on the front end.
Mhm. Okay. All right. Very good. Thank you. Okay. Yeah. Thank you, Brianna, for your comments. And I just wanted to, yeah, once again, thank you for the education and for taking your time out to create this video with me. For those of you listening and watching this, I hope that this has been very informal and or educational for you. And I just wanted to say that my contact information is up here on the screen. I basically do commercial and investment property loan origination. I can take everything from processing through underwriting to financing. I specialize in multifamily housing financing. However, as I mentioned earlier, I also work with notes. I work with private lenders, and I can do private lending. I'm also into creative financing, especially now in this kind of environment, economic environment that we're in. It's very difficult to get bank financing. And my logic and my thinking behind this is that I would rather have the sellers of the property make money than the banks. The banks are making everything very, very difficult for people. They're cutting back the amount of money that they'll loan out. In other words, the loan to value is going down. Interest rates are high. You have to go through a whole bunch of underwriting procedures, and there's somebody at the bank that writes the check or makes the final decision, and they may not like your deal for whatever. maybe it's in the neighborhood that they had a bad experience in or whatever. I mean, really crazy, weird stuff like that. And so your loan gets shot down. We understand that a lot of banks are in financial trouble and they're just, a few $1 million away from being bankrupt. At least that's what the rumor is out there. That's what I understand. But again, I think it behooves everybody, if you want to preserve your wealth, I would like to just ask you to consider doing seller financing and doing private lending yourself if you have some money, or I can help you acquire an asset if you want to invest in something that will give you some cash flow and some income. So anyway, my information is up there. Feel free to contact me. Like Brianna and Quest Trust, I'm more than happy to help you out anywhere, in any way I can.
Well,
All right.
thank you
Thank
so
you so
much.
much. Yeah. Okay.
Yeah.